need to review your will, especially if you're gifting to loved ones. Are you thinking about gifting during your lifetime? Now, traditionally, you'd pass on wealth to family and friends through an inheritance, but many people are finding that doesn't fit in with their plans. Instead, they're passing on some assets now whilst they're alive, but they do need to think about how it could affect the legacy they leave behind. Now, there are many reasons why you may be thinking about gifting during your lifetime. Now, the act may allow you to see the joy or security your gift can bring, or use gifting to actually potentially reduce your inheritance tax bill. However, one of the biggest drivers behind gifting is that younger generations are currently facing serious financial challenges. Now, whether your loved ones are struggling day to day due to insecure employment, or can't save for a mortgage deposit, as houses and rent prices are rising, gifting now can lend support when loved ones really need it most. A lump sum for children or grandchildren now can have a far bigger impact on their long-term financial security than waiting to leave it as an inheritance. Financial gift funds half of the house purchases among young adults. The Bank of Mum and Dad now plays a pivotal role in the housing market and demonstrates the value of gifting during your lifetime. Half of the house purchases among the under 35s involved financial support from family in some way, according to a Legal and General survey. This may range from a significant deposit to a loan, but 71% of home buyers say it's unlikely they could have bought a home without the support of their family. A deposit to buy a home may mean your loved ones' outgoings are now lower, as renting can be more expensive, and also creates a long-term financial security for them. There are also other reasons you may want to offer financial support now, from paying school fees to providing loved ones with an opportunity to travel whilst they're young enough to do so. Among retirees that have accessed their 25% tax-free cash pension lump sum, 6% said it was to provide a gift to children, a survey from Canada Life found. A further 1% plan to make gifts to grandchildren. Many more families are likely to use savings and investments and other assets to provide gifts during their lifetime. But before you hand over a gift, it's important you weigh up the impact it could have on your long-term financial security. Would taking this lump sum out of your estate now mean you could face challenges in the future yourself? So this is why it's important to actually review your will. Two main reasons to review your will after gifting to loved ones are as follows. Number one, the value of your estate will change. First, if you're providing significant gifts to loved ones, it could change the value of your estate. Understanding how much your assets are worth can help you effectively plan for the long term and your legacy. In some cases, reducing the value of your estate part of the reason you decide to gift. For example, you may want to bring down the value of your estate under the inheritance tax thresholds, reducing the bill loved ones will face when you sadly pass away. However, it can also mean the way your money is split up, your will isn't appropriate anymore. A pecuniary bequest, which means you leave a fixed sum of money, could become a higher portion of your estate than you'd actually wished. Switching to a residual bequest, where you leave a percentage of your estate, could make more sense. Number two, you may want to distribute assets differently. So the second, giving a gift now may affect your wishes for later. For instance, if you've given a lump sum as an early inheritance to one of your children, you may want to adjust your will to reflect this. This may include leaving the recipient a smaller portion of your estate so each of your children receives an equal amount when gifts and inheritances are combined. So how do you actually update your will? As a general rule, you should review your will at least every 5 years, or following a major life event such as getting married, making significant gifts, or your family actually growing? If you need to make changes to your will, there are two ways to actually do this. The first is through a codicil. This is a document that allows you to make amendments to an existing will. It must be signed and witnessed in the same way as a will and should be kept with the original will. While there are no rules about what you can change using a codicil or how many you can make, it's a good idea to keep changes small and straightforward to avoid complications. Now, the second option is to write a brand new will. This should clearly state that your new will revokes any older wills or codicils. You should also destroy your old will and any copies, so it's clear which will be used when you pass away. Your finances and estate planning are intertwined, and it's important they're considered together. If you're planning to give a gift or make other lifestyle changes, you can talk to us here at Sanctuary Financial Planning about what it will mean to your estate plan.